What does this mean, by the way, in terms of thinking going forward? One is whether, in fact, we're going to have re-regulation of the bad sort. Now, re-regulation is not always bad. The reason I gave the example of the savings and loan crisis is that the re-regulation that was done after that crisis made for a healthier and stronger financial system. So Congress can get it right. The next administration, I hope, will get it right. The behavior in Congress hasn't given me a lot of confidence. There's a reason it's actually extraordinary to have only a 10% approval rating and try to work to make it a 2% approval rating. And that's what's going on. So what's the other issue? Even if the Congress gets it right, fixing this problem is going to take a long time. The securitization model is going to be very important to getting the capital markets working again. The problem with the securitization model that was revealed by this crisis is that they did not deal with these problems that I talked about, which is that the originators of lending frequently did not have the appropriate incentives for the people who are the ultimate holders of the securities, which a lot of you people, I'm sure, are. So a lot of you are the people who actually got screwed by this in terms of what went on. What's part of the solution to the model? Well, the part of the solution is that, in fact, we're still going to have an originate-to-distribute model, but we actually now have to have one party, which is very large, which will do the origination, and then have the incentives so that the ultimate holder of the securities know that, in fact, the originator is going to make sure that the loan is going to get paid back. And that's going to require large financial institutions to do it. And in fact, if you think about what's happened with Bank of America, why did they buy Countrywide? Because they want to be in the subprime market eventually. They needed a retail operation to do that for them. Their mistake was that they didn't realize that, in fact, this would get so bad, so the human capital in Countrywide is disappearing, so it turns out not to have been a good investment for them. But the issue is they will then go out and originate, then they will distribute, and in fact, they'll set it up so there's recourse. You have to have large institutions to do that, because if it's a mom and pop store, they can have recourse, but they're going to go out of business if anything problems develop, so who cares? So it's got to be large institutions. Those institutions cannot do that until they get a lot of capital. And as you know, the deterioration of the balance sheets means that they're very, very capital short right now. It'll take a long time for that to be fixed, a long time for the business model to come back. It will eventually come back if the Congress doesn't screw this up, but it's going to be a long time. And this is not only going to mean that your business is going to be complicated in the future, but it also means that the headwinds in the economy are going to be around for a long time. So with those very cheery thoughts, I'll tell you there's good news for me and bad news. The good news as a scholar and as somebody who's done a lot of research on financial history, it doesn't get any better than this. It's good to be a professor. On the other hand, as a policymaker, and when I was inside, it was a very, very difficult period, very stressful. And as somebody who also is worried about my financials, for the first time in my life, I'm actually worried about my financials. I've always been very conservative, never worried about paying a bill, because as an academic, the great thing about being a professor is if you make any money, you're richer than anybody else. Why? Because nobody cares how you live. Nobody cares how you dress. So I'm only well-dressed for you. This is not the way I dress normally. And, nice suit, this is Amelia Zegna, this is nice stuff. That's only because that you've invited me here. But normally I dress in khakis and a golf shirt and buy my stuff at Costco. But even with my conservatism and the fact that I've never worried about paying bills, I am worried now. So there's going to be a lot of very interesting things going on in the future. You've got to keep your eyes open, because this is what you do for a living. And I'm more than happy to answer any questions you may have. Now, unfortunately, I can't see that well, so just wave and then you'll get a microphone.
What's a long time?
Well, first of all, it depends on how bad this is going to get. If you really screw this up, which is what the Japanese did, it took 10 years. So think about what happened in Japan. The ineptness of the government in Japan was unbelievable. What happened in Japan was that Japan, if you remember, 15 or so years ago, everybody was talking about Japan overtaking the United States. Remember, all these books being written, it's going to be the Asian century, Japan's going to take over, they're going to be richer than us, and it looked like it was going to happen. Japan was in a situation where their per capita GDP was about 80% of the US, and their growth rates were much, much higher. And it looked like they were going to take over. Not take over, but become richer than we were. That's when they were buying everything. Rockefeller Center was sold to them, and so forth. We were all worried about them buying up half the United States. What happened is that they hit a crisis. They had an asset price bubble, which blew up on them, caused exactly some of the similar problems we're talking about now in terms of the banks. Lending stopped, and what did the government do? They put their head in the sand and, in fact, did not do anything to recapitalize the banking system and get it started again. And as a result, Japan had subpar growth for over 10 years. So their GDP growth, which had been several percentage points higher each year than the United States, which is why they looked like they could overtake us, actually went to several percentage points lower than in the United States. So as a result, Japan has fallen farther and farther behind the US. And in fact, it's been a very, very serious situation for them. It didn't actually, it was a crisis where they just fell off the cliff. It was just creeping stagnation for over 10 years. So it could be that bad if, in fact, the wrong policy was followed. I don't think that's going to happen in this case. I have a little bit more confidence in what the government's going to do. My natural optimism is there. I actually think that we may actually have the government wake up and start to do the right thing, but we're not sure of that. So my view on this is that if the government does do the right thing, that we'll come out of this. It will not be that further long-lived crisis. But even so, it's going to be several years at a minimum before the capital markets get back to normal. And that means there's going to be a much more interesting, I'll put it that way, interesting investment climate for you guys.